Hey, everybody, welcome back to Grain Markets and Other Stuff. Thank you for joining me. We are joined by a special guest today, Ken Morrison, who has been on the show before. Ken, thank you for coming back and talking with me today.
Always thank you for the invitation, Joe. Always enjoy it, too.
We've had some good conversations in the past. The goal of today's conversation is going to be to talk about the acreage mix for this year, this spring in particular. We've got some much better prices in the corn market, the soybean market, other crops like cotton. We're going to talk about what's possible, what you think is probable ahead of that March 31st acreage report. And that report at the end of March, I mean, in your opinion, is that one of the biggest reports of the year? It certainly is in my book.
Yeah, I would say if you think about it in terms of the ranking 1 through 5 or something like that, I'd certainly put it at a 2 or 3. Obviously, there's always a little bit of fluctuation between that and the June report and the final. But, yeah, it sets the tone for sure.
And that's especially been the case, those fluctuations, the last couple of years in particular, with big prevent plant and acreage switching. 2019 was a great example of that. We're going to talk about all of that here today. We're going to try to keep this kind of short and sweet, but we've got a few slides we're going to run through. We're going to show you guys some very basic charts, and we're going to kind of get Ken's opinion, and I'll give you my opinion too on what the acreage mix may look like this spring. So let's get into our first chart here. Let's look at the spring insurance guarantees for corn. And I'm going to put that on the screen here. So what you can see here, obviously, is that we've got the best spring insurance guarantee since what, 2014? Is that right?
2014 at $4.58. And I like to kind of point this out, too. If you go back about 10 years, we've got the futures market at this point quite a bit higher at a premium to where the crop insurance fix was too. So I think that's also an important part, an element of sending the right signal. Obviously, we've got December corn around 475, and so that's a substantial premium. And there's only been about, I think, 7 years when the spring crop insurance price, actually that's less, when the spring crop insurance price was actually higher than what the harvest price was. So it kind of tells you what the trend is that we're in now.
And as we speak here today, it's March 3rd. December corn futures are what, 470 and change. I mean, that's a level that is profitable for just about every corn grower in the country.
If it's not, they're doing something wrong. And when I go through my model, I only include variable costs, and I don't consider rent a variable cost. That's a fixed cost. It's going to be the same whether you plant anything on it. So,
well, and I know from looking at farm budgets, I mean, it does vary drastically, but the one constant is that every spreadsheet I've seen so far for 2021 in regard to corn is certainly projecting some profits. Let's look at soybeans. You've got a similar deal, basically. I mean, you've got the best. Is this the best since 2014 also, or is it 2013?
2013, yeah. 2013 was 1287, and this was 1187.
And in terms of budgets and profitability, how are you seeing corn and soybeans compare?
Well, my model that I've used always bases corn and soybean cost on what Purdue University puts out every November for the coming spring. And so it's, any model for net revenue is going to be yield dependent. So I assume 2 yields, the national average yield for corn and beans, and then the high yielders, which for corn I use 220 bushel, and for soybeans I use 65 bushels to the acre. And I've been running my model since about the 1st of January, and corn has been favored slightly over soybeans, but never by more than around $25 to $30 up until this past few days, when corn started to outperform, December corn started to outperform November beans. So right now, I think based on that model, corn would probably get the edge by about $40 or $50 an acre relative to soybeans for those yield projections that I just mentioned.
And considering that we've been so close in terms of projected revenues and profits and that sort of thing. I mean, a lot of this could come down to weather theoretically. I mean, if we have a real early planting season, could that mean more corn acreage just simply because of the ability to do it?
That's always a factor. I think there are three factors that I would be watching this year. First of all, again, my model is based on cost projections that were put out in November. And we've had quite a price increase on fertilizer, especially beginning in about mid-January. I believe, based on a survey that DTN ran, about 70% of producers say that they had booked their fertilizer prior to the first of the year. So if you've booked your fertilizer and protected your cost there, I don't think $25 to even $40 an acre is going to change your plans. But if you've waited and are still exposed a bit or recently exposed a bit on your fertilizer, then yeah, it starts to narrow that spread quite a bit from where we were back in even, around the first of the year. But in my experience doing these models, I think it takes at least $50 an acre net difference to swing people out of their normal crop rotations.
And even with that, you'll still get a lot of farmers to probably stick with their normal rotation. Because if you're going to make, as I've always said, if you're going to make the decision based on what's going on right now, you better be doing the marketing. And some people do and some people don't. But I think that the prospect or the idea that you're going to see these massive acreage swings based on the ratio or the spread versus corn versus soybeans, it is sometimes overstated, like when there's not that big of a difference. Does that make any sense?
I think it makes a lot of sense, Joe, and I agree with you. I think it's a little bit overstated in terms of what the expectation is sometimes for switching acres. In my mind, and this is nothing too scientific except a few years of watching things, in my mind, I call it what is a discretionary acreage of about 3 to 5 million acres between corn and beans. And I think that's kind of what we're dealing with across the nation.
That sounds about right to me. Let's look at cotton real quick. And cotton, very similarly, looks like you got your best guarantee since 13 or 14. What are you seeing in terms of budgets and profitability there?
Cotton is the one that has had the biggest swing since the first of the year. Beginning at the first of the year, where relative new crop prices were, corn was leading the Mid-South and the Southeast in terms of favoring the discretionary acreage, probably by $25 to $50 an acre at that point in time. But the rally that we've seen in December cotton since the first of the year has really swung in the favor of cotton over corn or soybeans in that order. Mm-hmm. And my latest numbers show that, and again, it's based on dry land, corn, beans, and cotton, and yields that are appropriate to the Mid-South for all of the above. But I think cotton probably would net about $100 an acre better than corn right now, and probably about $150 an acre better than soybeans. And
that's significant. That will keep those acres in cotton. And it wasn't that long ago that a lot of people thought that a lot of these cotton acres would go into soybeans.
That's right. And at the National Cotton Council did a survey. They ran the survey between the 15th of December and the 15th of January. And they basically said the national cotton acreage will be about unchanged at 11.5 million acres. Well, I noticed at the Ag Outlook in February, 2 or 3 weeks ago, the USDA upped that to 12 million. And you'll see in my estimate that I've got cotton nationally at about 13 million acres.
Right. Okay. Let's take a look at prevent plant first.
Yep.
That'll be my next thing that I look at here. So here is prevent plant acres, corn plus soybeans plus wheat, dating back to 2012. And what's very obvious here, and I'm going to explain this real quickly for those listening on the podcast, we saw a big spike in prevent plant acres from 2018 to 2019 across these three crops. We went from 1.6 million in 2018 up to 17.5 million in 2019, corn, soybeans, wheat. And we know what happened. We had that just horrendous planting season. We still had big prevent plant last year in 2020 at 9.4 million for corn, soybeans, and wheat. Now, Ken, you're expecting here in your estimate that we're going to drop back down to 2016, 17, 18 type levels. Is there any reason in particular for that, or you're just kind of assuming normalish weather for the most part?
I think just like when you build a balance sheet based on supply, you start with the assumption that we're going to have normal weather. And so normal weather implies that you're going to get back to something normal in terms of prevent plant. And so that's the only thing I'm hanging my hat on, is that you have to start somewhere and, change accordingly if you have to.
Well, and that's the way USDA does it with all of their initial projections for the most part. I mean, we always start every year with the trend line yield for corn and soybeans. With these, a lot of projections, they start that way. So you almost have to start this way and then adjust if necessary, I suppose.
That's right.
Okay, so we're going to go on the assumption here, and I know people are going to say, oh, Joe, we've got a drought out in the West, and there's going to be all these issues. We're not going to look at that here in this example. There's still a lot of time. So let's go with the idea here that we have a normal-ish prevent plant scenario. So let's go to the next chart, which is total acreage for the 8 major crops, which are corn, soybeans, wheat, cotton, sorghum, barley, oats, and rice. And you've got this, your estimate here, 256.5 is equivalent to 2014 type levels, pretty close to it.
Exactly. I started out with a few assumptions for this, and that is that, as you pointed out earlier, the crop insurance prices are back at 13 and 14 levels, 2013, 2014 levels for corn, beans, and cotton, which imply a healthy amount of net revenue, a lot of incentive to plant. So I start out with the assumption that from a price and revenue point of view, we should encourage the similar acres that we have at the peak levels over the last 10 years. Actual planted acres of the major 8 crops in 2015 was 2014 was 257.5. And so I'm starting out with the assumption of 256.5, saying that from a revenue incentive, there's no reason why we should not try to plant that volume of acreage.
And Ken actually did send me a spreadsheet with his breakdown of how everything would be allocated. I don't want to show you that and give you guys too much information or an information overload here. But the general theme is that, across these major crops, you've got good prices. There's no reason to believe for the moment that we shouldn't get back to a 2014 type level, I think. Right. Okay, so let's move on to our next piece here, which is combined corn and soybean acres. You're a little bit above where USDA said that we would be in the ag form. They were 182 total. Is that right?
That's right. Yeah. They had 92 million corn and 90 million beans.
And just as with a lot of things, like I mentioned, those are projections that are based on what they consider to be the conditions and probably a normal planting season. Those aren't based on surveys. Why are you higher than USDA here with your estimate?
First of all, USDA, unlike most ag forums in the past, USDA did not issue any estimate of the acreage for the 8 major crops. So.
And they had done that in the past? They
have done that in the past. I went back and I've saved all my files from past ag forums, some of which I attended. And they used to do that. So first of all, we don't know what USDA did in terms of the 8 major crops. But speaking specifically for corn and soybeans, let me put it this way. I went back and I looked at the March 31st planting intentions last year, right? The intentions for corn March 31st last year was 97 million acres. Now, okay, so I've got 93.5 million corn in my estimate. It just tells me that the price incentive is better today than it was a year ago. I believe that we're going to plant more acreage or even attempt to plant more acreage in total than we've had for the last 4, 5, 6 years. So I just see the net revenue. It's consistently favored corn. And so I just think that, if anything, I wouldn't be surprised if I'm a little low. I mean, I looked at that 97 million acre intention last year and kind of said to myself, and that was after I'd come up with this estimate. I kind of said to myself, why would people want to plant less corn this year than last year? So, that's kind of where I'm beginning in.
Yeah, I think that I think these are good numbers to start. So as you can see here, if you're watching or listening, Ken's got his corn acreage number at 93.5. He's got his soybean acreage number at 90.2. These are Ken's estimates. And I kind of agree with you. I mean, I feel like I've seen just in so many instances that when you have the pricing incentive, the farmer is really going to be aggressive about planting these acres. I mean, even 2019, like when we got into that late planting season, but the prices were really elevated and provided that incentive. I mean, farmers went and planted this stuff super late just to get acres back because the price was there. There's nothing like price to provide an incentive to get this stuff planted. It just seems like it always works that way.
There's another element that I didn't mention that I think is a swing factor that may favor corn. We had an early harvest last year and a very good fall for fall application of fertilizer. I don't know how to model it, but my gut tells me that people have committed to nitrogen applications in the fall are pretty well locked into corn. That may not be what they would have preferred when it came to February or today. But if you've applied nitrogen, you're locked into corn. And I mean, let's face it, in my mind, last fall was one of the better falls for fertilizer application that we've had in several years.
Yeah. I keep thinking in the back of my head, not really based on anything, but just based on the prices and how I've seen the trade and traders consistently miss the acreage numbers. I keep thinking in the back of my head, USDA is going to print like a 96.5 million corn number on the 31st. I have this idea in my head, and I may be totally wrong. It's not based on anything, but I feel like I've seen stuff like that happen before. And I feel like the trade, like when we get these pre-report trade estimates ahead of the report, I feel like they're off by like tremendous margins in so many situations. And I feel like if there was a year for that to happen again, I mean, this should probably be it.
I think that may be right. And that's kind of what I was saying earlier when this morning I went back and looked at what the intentions were last year. Obviously, we didn't make that due to weather, but when I saw that we had intentions to plant 97 million corn last year, I thought, wow, I might be low at 93.5. So.
And of course, the surveys are out now. I believe they farmers have them, and I think that they go through the second week of March. Is that right?
I think that's right, around the middle of March.
Yeah. So, I mean, we'll know here, at the end of the month, what USDA says about it. And like we said earlier, I mean, this is not the March 31st report it's a starting point. It's not the end game. It's a place to start based off of those surveys, but decisions can change after that. I mean, a farmer can change their decisions based on a number of factors after that first or second week of March, certainly.
I think that's right, and it also depends on planting weather. We've seen years, as you remember, when the weather was good, they just keep on planting.
I wasn't going to ask you about this, but what do you think about the drought over the Western Corn Belt, Northern Plains? I mean, do you think it's an issue? Is it too early to say? My kind of view is that it's probably too early to say.
I'm glad you brought that up. I believe it influenced me not so much on corn acreage as it did on cotton acreage in Texas, where I believe you'll see an uptick in grain sorghum acreage in Texas for a couple of reasons. I mean, first of all, you've got the drought, but second of all, maybe more importantly, grain sorghum has been trading at a premium to corn in the Southwest forever. So there's a tremendous price signal there. So I think that the drought in Texas, West Texas, did influence me, but not so much on corn as it did on cotton and grain sorghum.
Yeah, understood. Yeah, it's going to be a wait and see deal. I know the last time I think I looked at the extended forecast, there was maybe a little bit of relief for some of these drier areas, but it's pretty early and a lot can happen. And it's not like we can't plant a crop in dry conditions. It'd be nice to catch some rain prior to that, I guess. Any final thoughts here before we wrap it up, Ken?
No, I think as you mentioned, March 31st is going to be a big date, but we're going to get some private estimates that are survey based because coming out prior to that. I know Allendale, for example, has a survey out now to their customers and clients on acreage intentions, and I'm sure there'll be more. So I think the market's going to get a hint of what's going to be said, 2 or 3 weeks from now.
Very good. Well, thanks for joining me, Ken. Hey, guys, if you need some more information from Ken, I'm going to link his website in the YouTube description. It's morrisononthemarkets.com. If you need some more information from me, you can email me at info@standardgrain.com. Ken, thanks again. We'll catch you guys a little bit later.
Okay, Joe. Thank you again. Bye-bye.